Few days back, my friend John Jenkins, who's a topmost technical analyst, asked me if it is a good time to buy NITCO. That only reminded me about Ramana Maharishi's quote. He says, only remove ignorance. That's all there is to be done. It's not only applicable in spiritual, but also applicable in all walks of life. Let's use it to demystify stock picking. How to remove ignorance? We'll take it in three parts. 1. Technical aspects. 2. Fundamental analysis. 3. Information from the retailers. So John Jenkins informed me that the stock has been forming a rounded bottom. Remember that it has hit a high of 400 rupees in the year 2008 and now it's trading at around 50. Jenkins, being a top technical analyst, used to buy it at around 25 and sell it at 20, bought it at around 30 or so, and then sold it at around 20. So again bought it at around 30, 35 and sold it around 45. Now also he has some quantity. Now we are not interested in knowing how to trade it technically, but we would like to know if it is worth for long-term investing. That's our case, because we don't want to waste our time on looking at the ticker. We would like to know if we can hold it for long and gain a lot. So remember, rounded bottom is a bullish sign in technical analysis, but we are not bothered about it. Let's go further and explore it. The stock has been forming higher highs and lower low, which again sign technically. So higher highs means the stock moves up to a higher level, and lower lows means previous low is not breached. For example, here we take it with an example of NITCO. From March 16, we see that May 16 the high is around 45. Up to May 16 you can see that the high is around 45 or so. The low is around 35. Let's fix it as 35. But if you take the next month, you could see that it has breached the high but not breached the low. That means the stock has moved up from 40 to touch a new high of 45. The low again is not 35, but it is again around 40 rupees. You could see that it is touching higher high, that is breaching the previous high and protecting the lows, the previous lows. Every month it has happened. So that means it's a good sign, and that's the reason for him to buy the stock and then hold it for a month or so and then make a good profit out of it. However, after December, because of the demonetization, it has fallen down, but still it has not breached the previous lows of the year. So he was courageous to buy it at lower level and then hold it for good gains. Of course, now technically we know that it's forming higher highs and lower lows, which is a bullish sign. It has formed a rounded bottom, again a bullish sign. Similar to John, some block deal has been made by Bright Star Equities, who bought good quantity, 1+% on the 22nd June 2006 at 47.24 and sold at rupees 53.88 on 9th November 2016. Around 4.5 months they held and made a good profit of 14%. That's a good sign for a technical analyst. We have found that technically it is good, but let's check fundamentally. So it could reveal some divergent information. Technically it may be good, but fundamentally it may not. Let's check it now. NITCO is established in 1953 and its volume market share is around 6% in India. Headquartered in Mumbai, has a pan-India presence with 22 offices and 1,100 direct dealers. Exports to Middle East, Europe and African countries. We had checked the net worth and found that it is not a great company to buy it. The net worth has been going down year after year. In the year 2011, the net worth was 535.04 crores. Come 2012, net worth has gone down by 480. It's been a continuous process. The company's net worth is slowly going down year after year, and now currently in 2016 March, the net worth is minus 101.89. It means to say that the company has eroded all its net worth and it has a negative net worth, which is very bad for any company. The debt of the company is also growing year after year. You could see that 2011 the debt was 572.34 crores, and in 2012 720.86. Year after year it has been increasing the debt, and now the debt stands at 1300.74 crores. In other words, it's more than 2.5 times the debt which had in 2011 in the last 5 years, which is a most worrying sign for us. So we know that it's good, but fundamentally it's not great. Let's see the sales angle of the company. The past 5 years, the sales of the company has not improved. It's been flat, staying around 700 to 800 crores for the past 5 years. The loss has been mounting, probably because of the debts, probably because it does not have a pricing power. The profit after tax has been going down year on year, and finally it has improved slightly better from 2014 onwards. Now we have seen technically it's been good, and fundamentally it's not that great. So in order to get a better view, we went to the retailers and collected information. Retailers informed that cheap Chinese imports accounts for 10% of the total sale, affected the domestic tile manufacturer. A tile manufactured in India costs ₹40, while the Chinese one costed around ₹30. To protect the domestic manufacturer, Government of India slapped anti-dumping duty of $1.37 per square meter on import of tile from China on March 2016, which helped domestic manufacturers. That may be one of the reasons for NITCO to post lower losses in the last 2 quarters. So conclusion, technically a rounded bottom has occurred, and lower lows, higher highs also indicate a buy. So traders can buy and sell if one knows how to buy and sell, but fundamentally the losses have eroded the net worth of the company. Further, high cost of operation has put the company into deep financial trouble. Despite having a sale of about 700 crores, the company is finding it difficult to come out of the red. From the dealer's point of view, Chinese import continue to occupy the market, and hence the company don't have the pricing power in order to increase the margins. So these are the problems. So we have concluded not to buy the company, and I hope this video has helped you to do a basic research on companies, because we have been receiving a lot of buy calls from CNBC. If you tune to the channel for 5 minutes, you get 5 recommendations. So this kind of analysis would help you to ascertain if you can buy a company for a long term or not. With that, I come to the end of this session. Don't forget to subscribe to our channel, or you may miss out a great video. Thanks, and let's meet soon.